So the market's really turned around today, and that's because that's the way the market's set up. It's always going to be moving aggressively at the margin because of Citadel, the market makers. Another ad, but let's just look at what happened today. The VIX hits a level where it starts being hard to hold. It really takes a lot of energy to hold. You see that over and over again. This is what I said in my last video. But today, it fell apart. And when it did fall apart, what happened? S&P rallied. Doesn't look like it on the daily chart. Let's look at the monthly chart of the S&P. That red candle is something that usually bounces back up, but we have to be worried. We do have to be worried because this is an ugly market right here. We're falling through the 200 day, and that's a death cross. That's something that you do not want to see. The Nasdaq, something similar. Here's what I said about ARK at $45. It's due for a squeeze. It's due for a short squeeze. It's right at a bump. You see volume come back, and hopefully Kathy Wood gets a little bit of help here. There's not much volume on this bounce. It's going to stay down here for a while, but eventually I think it's going to see new highs because innovation, the companies that she owns, they're good companies. Their valuations have been whacked, but what goes down can go up. What goes up can go down. You have to think of the reason why. And I would strongly say that the market is mispricing per usual. So hopefully tomorrow we see more of a bounce, but start looking for puts for a full bear market because that's what this is starting to look like. Bear market rally and then down. For the S&P, that 350 put, that's what I'd be looking at 200-day average. It's going to creep up over time, over the next month. Be looking for the S&P to go below 400. Something I don't like to see as a bull, but get ready for it.